There, now that I'm looking at this, I didn't do a lot of trading, but I see there were some opportunities to get into some trades today. This is what Bitcoin does, right? We're in some chop. We're shaking people out to the upside, to the downside. Pretty ridiculous. When did all of the shorts start piling on yesterday? Right here. Right here is when all the shorts started piling on. They got wrecked. I mean, it's nonsense. Day after day after day, people just losing money because they don't understand volatility, probability, and statistics. They just don't. They're in the cult. They're in that traditional TA cult where they think they know what they're doing, right? Because that's pushed so hard on people. This is the way. Woohoo! Look at TradingView. We got millions of TA indicators, right? Yeah, well, it's not the way to trade. Not the way to trade at all. And to be honest, it wouldn't shock me at all if a bunch of longs, let me see. You know what I always notice though? It's like the bears are dumber. It's like the bears are dumber than the bulls. It's like the bulls actually, the longs are falling off. All right, this is where you should be taking profit. Why? Well, if you're looking at price action volatility ranges and distribution levels, see, we start out the day. This was a no-brainer what was going to happen. You can see price action open up right here on this candle. We get a wick down. Here's the 68.3% daily Laplace distribution level. The bears are like, or the bulls are like, no, we're not going to give it a chance to even get down there. There was actually 3 wicks right to the same spot right here. There's no data sets lining up with that crap. This is just where the algos, right? The algos were buying right here. They were ready to take this thing back up to the upside. So it doesn't even get a chance to test the 68.3 Laplace distribution level to the downside. Where did we just get to? Second standard deviation, normal distribution on the daily, and the bottom of the monthly range. Here's the center of the monthly range. Here's the top of the monthly range and the bottom of the weekly, center of the weekly, top of the weekly. Okay, this was a no-brainer where to take profit, especially now. This move right here, just for instance, if I would have got into this position, where am I taking my profit at? Especially when I see this price action. Here is the new daily range, right? The 2 red lines are the outside of the daily volatility range. Here is the center of the daily volatility range. What else was right on top of it to the dollar? The 68.3% Laplace distribution to the upside. When you see a 15-minute candle nuke through this area like this, it's a no-brainer immediately. Where am I taking my profit? Blue cross line, first standard deviation, normal distribution to the top side. Right? We messed around through the middle of the night, bouncing back and forth around that 1 SD level. And then literally right when pre-market, traditional markets open up, we pump it up, right? The institutions pump this baby up right to the bottom of the monthly range in the second standard deviation, normal distribution on the daily. So wherever you got into this position right here, boom, you take profit at the 1 SD. You mess around is what I noticed. These algos didn't give like a volatility trader like myself really time to get into one of these positions. Because what am I doing down here at the beginning of the day? And I was sitting there waiting. I was waiting at the 90 or the 68.3% range to the downside. Never made it there. Literally didn't make it to the 4-hour 68.3 Laplace distribution probability level right here. You know, got front run like crazy. I was going to get in somewhere in this area right around here just for a nice quickie. When I saw this line up with the middle of the daily range, the 68.3 to the upside, it's kind of telling me, hey, man, this thing is going to go up here and hammer that area. And it did. It did 100%. Say I get in on this pullback, right? We pull back, we drop below the 1 SD. So where would I have been looking in to get into a position? If the volatility was dictating to me on low time frames, 5-minute, 10-minute, 15-minute charts, the top of the daily range is where I would have been sitting there waiting. Probably front run it by about $50. Never would have got hit, right? So then it runs right on up. This could have been a good entry on the pullback. Look at this. Pulled back right here, new 4-hour candle, came back down to test the top side of the 68.3% 4-hour range. Boom, it launched off there. Went up, got above this first level of the daily volatility range, this first significant level, this red line. Came back down here recently, a couple wicks, boom, boom, bounced right off of this, the 4-hour candle before this one. This is the 68.3% Laplace distribution range to the downside. We got 3 wicks right to it. This last recent wick, boom, right to it, bounced right off of it. Let's see what kind of a little scalp that would have been. 42,862. I mean, literally about $800. $800 quick little scalp, 2 15-minute candles, bam, bam. So this is how, but you don't just trade this blindly, right? And I'm not going to really get into my entire workflow, but when I see all this happening, I'm over here. I'm like down on the 5-minute. I'm looking at the breaks and correlation on volatility. I'm looking at the Wolf's Band. I'm looking for divergence between returns and price action. I'm looking at the entropy. You know, what is all this telling me? Where are we on the power means, right? What's happening here? Are we getting ready to bounce? Is that the same area? Let me actually see what time that was. Right at noon. Right at noon. The noon 15-minute candle. That baby just said, hey, I'm going to come on back here. Yeah, it was actually right there. Yep, it was this candle right here. So now power mean wise, that's really not telling you anything right there, right? That's really not telling you anything right there. But you go to the slow length AVR, volatility or correlation is negative. Volatility is going sideways. I would have probably been in on this first yellow candle here to get some of that scalp. Probably would have got about $500 of it. Yeah, maybe about 400, about half of it. So yeah, this is the kind of stuff you're looking for. This is the kind of stuff you're looking for. Let's see. What was over here when that happened? There it is, 12:05. Okay, that is interesting right there. What am I seeing here? Give me a second. When did that bull bear dip play out? 3 15-minute candles right there. That is a funny little read going on there. See something. So that busted right into negative correlation as variance was rising. We just had an upgrade, a beautiful upgrade with the Wolf's Bane. We'll push it through to the published indicator soon enough. Yeah, I'll have to check on that too, to check some different lengths. But as you can see, now the lines have a black border. You can see the returns oscillator, the CV, they have black borders now. So when everything gets a little crunched up, they're a lot easier to see. Okay. The outliers are built into the coefficient of variation. You can see when it goes pink, you're having an outlier, right? What's an outlier? It's telling you there's a fat tail event going on. At the same time, boom, the Z-score has a fat tail event going to the downside. I don't even need to look at the correlation. It is negative, right? I mean, that was a nice little move. If you get in right when you start to have an outlier, I mean, we're talking about 43.8, about $700. Not bad at all. What else is going on? Get up to a 15-minute chart here. We'll be back to 53.5. So these bulls right now, actually, let me go back over here real quick before I dissect that 15-minute chart. These bulls are going to want to close this price action above this 95.4% daily Laplace distribution range. That's another thing that was right up here too. Not only do you have the second standard deviation normal distribution, bottom of the monthly volatility range, and the 95.4% Laplace distribution range, all piled right here. This is going to be a tough area by the end of the day to crack. If this does get cracked, you're going to see a push. You're going to see some massive. You're going to see a lot of volatility come in. That's what it's going to take. The bears are defending this area big time. You can guarantee that. They do not want these bulls to get back into this monthly volatility range, let alone back up in the weekly. All right, so we'll see what happens. Wouldn't be a bit surprised if we just chop, 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 choppity chop, knocking people out of positions that aren't taking profit. That's why we take profit. That's why we teach people to take profit. It's a no-brainer. It's what you want to do to become a profitable trader. Let's see here. I'll be drinking a lot of water. You see my voice is deep. We got smoke coming in again. Now it's from Sequoia. Now it's from all the sequoias burning. Non-stop. Always something. What's up?
Hey man, speaking about taking profits, I saw some chatter recently in one of our Discord channels where somebody, I think a new guy, was asking about which exchange is better, like FTX or Binance or whatever, because he had like a small profit, but the end he ended up in a bigger loss than he thought. And I just wanted to reiterate on a video for anybody new to watching these video streams: be knowledgeable of the exchanges you trade on, because the fees can eat away your profits, especially if you do something like enter a market trade, which you should not do, or if you are not managing your position size well, where the small little percentage fees that they add on to your gains can eat away all your profits, and you can end up with a profitable trade ending up in a loss just because of fees. So know your position and size and risk, man. Manage that risk accordingly. Don't think just because there's a plus sign on your P&L that it's a full profit. It's unrealized gains during the trade, and they have to apply all their fees and trading costs and everything else to your trades. So make sure you know the percentages, make sure you know the amounts they take before you enter trades. And if you don't know them, you should ask your exchange. They should be able to tell you what those things are, or ask around here in the channels. Everybody knows these exchanges. Anyway, I just wanted to mention that, because I hate seeing people win a trade but lose a trade. You know what I mean? It's crazy.
Yep, and I got a good answer. Number one, if you're taking profit and you have an area of interest where you should be taking profit, and if you're not using these distribution levels or whatnot, hey, maybe you don't have these yet. You will. Be patient if you buy the new indicator package. But in my opinion, this is not financial advice. There is an exchange out there, FTX. Right now, if you stake 25 FTX tokens right now at the current price, it's about $1,400 to get in there, buy 25 FTX tokens, stake them. That's your maker fee. And no, this isn't some crazy racist symbol like they try to push. This is a zero, or AOK is FTX. Zero fee. If you put in a post-only limit order, zero fees, right? If you stake 25 FTX tokens, in my opinion, that is the best thing going right now. You cannot beat that, especially if you trade this way. It's a very high percentage of you being able to get in limit orders, right? If you know where all these areas are at, you know where to put in limit orders. It's going to pay off big time. That way you can take nice little scalps. And if that's all you're doing is taking nice little scalps, it's a no-brainer. Get your entry. When Bitcoin moves $50, $75, $100, go right when you see the price start to take off, go in, put a post-only limit sell if you're long, right? It's going to go up, hit your order, no fees, all profit. So that would be a good thing to do right there. It depends on what your trading volume is too, right? I mean, There's exchanges where you can work your way up in trading volume. Even without that, if you have a fairly high trading volume, I mean, you can get down to like 0.05%, things like that. So on FTX, I think it's 0.06. It gets low as maybe 0.02 if you're, a month? I mean, it's a lot. It's like $1 million in trading volume or something. You can get down real low.
But like if you have like a small startup, you're just starting out account and you're just starting to trade and you're just putting, $10, $20, $50, $100, $1,000, whatever on the line, less than a Bitcoin or whatever on the line, you got to be aware of those fees on whatever exchange you're using. So like if you don't have, I don't know, you don't have the $1,400 to put in, on FTX or whatever to get zero fees, and you're paying exchange fees on whatever exchange you're using, you got to be aware of them, because And those things will eat you up if you're not careful. A lot of little trades get eaten up that way, for sure. You got to be careful with your position, for sure.
You know?
Yeah.
And like right now, I mean, if you do have $1,400, this is an investment as well, not financial advice. This is what I would do. FTX token right now is $56. If you understand what's going on with FTX and how they're moving in this whole industry and how big they're probably going to be at some point. I mean, look at Binance Coin right now. What's Binance Coin at? Almost $400.
Right.
So not only are you staking a token right now that's $56, do you have any idea what that could be worth at like the end of a massive bull run where Bitcoin's like $250,000? This FTX token could be $500.
Yep.
Right? So it's a no-brainer. If I were just getting into trading and I was looking at taking care of the fees altogether, I would save up that if you have $1,400, save up the $1,400.
Yeah.
Freaking stake 25 FTX tokens. Trade on FTX. You have 0 fees if you put in limit post-only orders. Oh, look at Cardano running.
If you can't use FTX, some people can't use it for whatever reasons, geolocation or whatever. There are not necessarily 0 fees, but very close to it. You can get, if you're spot trading or whatever, you can go on like Femex or Dudex and you can trade spot for like 0 fees as well. Or, very little fees for, some of them are 0 fees and some of them have a subscription model where it's like you pay $20 a month or $10 a month or whatever,
There it is.
for your trades. And so it really reduces your spot trading fees as well. But yeah, FTX is really great if you can do that.
Holy crap.
Not sandwich making advice.
So there's Cardano. And there's Bitcoin. Pretty, I don't even have to look at a correlation coefficient, see if they're correlated. Cardano is one of those tokens that's usually pretty highly correlated with Bitcoin. So if you're taking positions in Bitcoin, it's pretty safe to say you can jump on board on Cardano too. And here's a good example. BTC is only up, 7% today? Cardano's up almost 13%. Yeah, big difference. I did see some other stuff that's moving, like Avalanche up 20%. Solana was up like 20%. Where you at, Solana? Where you at, Yellow Shitcoin? Yep, 20%. 20%. Anything else sticking out? Luna. Fuck, I just don't get it. It's up that's up 30%. Old Terra Luna. I bought that the first time at like $5.
Solana's an interesting one. I like it.
Yeah, I mean Solana. It's just pumping because these NFTs and shit. Wait till people start freaking popping them. Really get Cardano going. Cardano's gonna really rip.
I like the whole proof of time concept. I think it's not horrible. It's not horrible. It's pretty good. Like their whole consensus model is pretty neat. But we'll see it be tested over time. And so far it's already been shown that at least temporarily it could be flooded with BS requests and basically taken over until the rest of the consensus providers were like hanging around together to fix it. But still,
here we go.
I like the idea. Of it.
Let's check out these projections. So I've got this projection on PB2 started back here like I've been showing, where it was retesting, came down, retested the mean of this projection here, made a run at it here. This big candle tested it to the dollar here, and then we had one more daily down, all right, yesterday. And where did it bounce from? Bounced right at the 99.7% Laplace distribution range on this projection. Plus, it got a little bit below the 68.3% range on this projection from way back here, right? When we were up at 43 and we dumped from there. Not dump, had a 4-day pullback. But also, so when you see this coming down, you see this wick from yesterday. Not only did it come down here and nail the 2SD to the downside, normal distribution, it was at that 99.7 Laplace distribution range. What else was happening? Bull div between returns and price action. Now you can see, look right where this wick went to. right? This wick today, where did it get stifled from? I've seen a lot of people talking, they just yak, yak, yak. Went right to the bottom side, 95.4% distribution level. Laplace, or for Laplace, right? So that's kind of got where it got stifled. If this is going to continue, we'll probably retest this mean up here. Maybe by the end of the week. What is it? Wednesday, Thursday, Friday. We're talking back up almost 50K. Let's see what happens. Let's see if this move continues. Could just be some more chop, right? I really don't think it's coming down here to test down here under 30K again. Could. It's a probability. Doubt it, though. It's not high on my, it's not a high probability for me. 30K is what I was looking at, right? Was like the 38, a little bit over 38K area, 38. Like if we were going to continue some of this down move, I was looking for the 95.4% Laplace distribution level on the daily right down here. Right now, it's a little under 38, 37,979. The bulls aren't having it though. And now, I mean, we're going to move up. This new daily volatility range is probably going to be up here around 42.5, 42.6, something like that, right in this area, depending on what happens with price action, which is good. Let's get it. Let's start moving these daily volatility ranges back up here by the into the monthly and the weekly range, right? First, we got to get them back up into the monthly range, and then work it back up here into the weekly range. And then if Bitcoin can stabilize up here like above, let's just say 47K, this thing can start ripping again. Because that was a hell of a fake out. We got everything on the price action volatility ranges lined up perfect. And when we opened that day, when the daily was above the weekly, was above the monthly, boop! It dropped. Nice little fake out Bitcoin, but that's why we definitely just trade volatility. I'm not going to blindly just go, oh, I'm getting in along here because everything's set up perfect. Yeah, people would have got wrecked doing that. That's why you got to use everything. Got to use everything. What's happening? Let's check this out. Let me go to a 4 hour. I usually don't do projections on a 4 hour. Oh, this will be interesting. Did that really accelerate on that down there? Turn off PV2. Get my measuring tool out. Let's blow this up a little bit. Yeah, there we go. Now I actually got something I can work with on the 4 hour. There's a lot of consolidation and shit going on for the longest time. Let's see. Start this at. Yeah, rip it right to here first. 20. Let's see. Let's see what this looks like.
The triangle says it goes up to $1 million. The triangle.
It's back. Let's blow the steps up to 2. There we go. 20 and 2. 20 bars back. Let's bust that projection up first. Put this on the 20.
QB is good, man.
And what's great about these indicators, these are private now. And when you do, I'm going to talk a little bit about the Discord where I'm setting you up. This is an exclusive Discord. If you're watching this on YouTube, there's a reason why it's an exclusive Discord. Because we're not your run-of-the-mill YouTube TA guru goofball, right? We trade volatility, probability, and statistics. Our Discord is packed full of educational material, right? We're getting ready to launch our new indicator package. It's going to have some really good combination indicators, one of them being this Wolf's Bane. It's not hard to learn how to use. This upgrade's great. The Z-score now has a log return function, which is great for divergence. It's got a returns oscillator, and it's got a coefficient of variation indicator. Let's go back over here. So there is going to be a small fee to join the Discord, right? Think of it as an access pass, right? To get into the Discord, to see the opportunity that you do have with all this education, and to get the opportunity to get our indicators. That's what we think about our indicators at this point. They're good. They're so good, you don't know how bad. We just want to keep them to ourselves. I'm serious. We're like, it's a slim margin, right? We don't have to sell indicators, right? Most of us trade. So we're trying to get people from traditional technical analysis to understand the power of what these things will do for your trading career. So we are going to offer our new package up to people. But at the same time, we have some private indicators that we have just decided we're going to have these private. And if you come into the Discord and you show that you're a productive member, the people in this Discord that have coded some of these private indicators, when they recognize you, and trust me, they're always watching. The wolves are always watching. That they're probably going to give you some indicators for free. Don't be surprised if you check your inbox, if you're being active in the chat, if you're asking questions, if you're wanting to learn this, especially if you buy the indicator package. They will see that, and they will likely give you some free indicators, which is mind-blowing. You don't know how big that is, right? Like I just said, these things should be private and kept private. They're that powerful. So just know that's probably going to be coming. And you know what? I'm going to back this up too. I'm going to bring this down. You know what? It's not going to matter. Let me see. Yeah, we'll drop it a little bit. Because that's an interesting read right there. It might almost be better to bring it all the way back down here. We did. We got outside. This would have been a good place to start the projection, right? I mean, there was a lot of, even on the 4 hour, what do they call this? What do they call this in, people that read price action, right? It's the rolling hills of distribution. First, you usually get a big ass dump. And that's what we had, right? We had a nice big dump. And then the people that literally dump the market, then they will get a spot and they will set limit sell orders in. The market has a natural drift to the upside. And what do probably 99% of retail traders do? They love to hit the market buy button. Oh, let's market buy, let's market buy, let's market buy. What are you doing? You're market buying right into these big algorithm limit sells. So you buy in, boop, market pulls back. It's distribution, right? And then if that's not enough for them, if they're not selling off as much as they wanted through that distribution, they will have another dump. And that's what you saw here. We had another big sell-off. Now this is getting interesting. But you can see from when we started that second sell-off, we got outside the 99.7% range of this 4 hour distribution, this Laplace distribution model. So boom, it was kind of a no-brainer, especially when you're hitting on this 4 hour. I mean, look at some of these wicks. I mean, we're hitting like 4th standard deviation, almost 6th standard deviation, almost 5th standard deviation. At some point, you're gonna rip back up. And at the same time, when all this is going on, look at the returns. It's the returns, right? Printing all this bull div, right? Lower lows on price, higher lows on the return columns. And I'll make that look just to move up a little bit, buddy. Let's get it correct. People are just like, wow, you didn't have it right. Yeah, I did. There you go. So it did. It built some, and I did see somebody in the Discord, right? That I think the divergence is starting to click. He's in here right now. He's probably got a big smile on his face. He knows exactly what I'm talking about. And I did see him post something. I think it was in it. Was it in the stream chat? It was somewhere where he did post what a lot of people don't catch. Hey, and bravo, Sabron. I mean, he pointed out some hidden bull div. some hidden bull div. I forget what time frame it was on, but he did point out some hidden bull div between price action and returns. So that was really cool. And what is hidden bull div? It's when you have a higher low in price action and a lower low on your return candles. This is on this 4-hour chart. This is exactly the opposite. I'm pretty sure he was charting that on a lower time frame. It might have even been like 5-minute chart or something if I remember correctly. It's a pretty low time frame. But that's what we do as volatility traders. We're always looking for divergence on these low time frames that will have confluence in what we're seeing in the volatility, and like this Wolf's Bane indicator, right? Where when people get this chart, where was that? Where was the price action at when that hidden bull div was building, right? And what is hidden bull div? It's a continuation divergence. So it's a no-brainer that you're going to get continuation. And if it's bullish, right, that move before that you're getting continuation off was to the upside. Same with hidden bear, right? Hidden bear is just continuation divergence to the downside. And like I've went over the last few streams, divergence moves the market. That is the randomness. So the randomness in essence is the imbalance in buy and sell pressure. That's just, and I have people sometimes DM me and they just want to know, well, where did you work? It's like, dude, I didn't work anywhere, right? I've been self-employed my whole life. I've always owned my own business or whatnot. I studied all this myself hard, right? It's just, if you put the time in to study volatility, probability, statistics, you learn how to read price action, it'll start clicking one day and you'll be like, what the hell? It's not as hard as it looks. It really isn't. You just got to put the time in and you've got to understand what is actually moving a random market. It's not like it's random, but it's not like there's a force behind this randomness, and it is the imbalance in buy and sell pressure. Divergence just moves the market all over the place. I can go to any time frame and show you how divergence just continues to play out up and down, up and down, up and down. Bull div, bear div, hidden bull, hidden bear. I mean, it's incredible. And when you start to see that, then you realize you're like, oh shit, this plays a huge part. That's why I said yesterday, if you ever got some clown ass idiot out there that's trying to tell you, and everybody knows who I'm talking about, that divergence is stupid and it has nothing to do with trading, know immediately the guy's an idiot and does not trade and is full of shit. Divergence plays a huge part in the market. The problem is people try to trade div when they're using traditional technical analysis indicators like the relative strength index or stochastics or MACD, right? You're not going to get good divergence reads when you're using that kind of stuff. You're going to end up getting wrecked. The only kind of div that really matters is between price action and returns. And that doesn't even have to be confusing. So what's that divergence even telling you in the first place? That the return on your investment is diminishing. Time to take profit, right? That's what it's doing. Where the other kind of divergence is with RSI and crap like that, what the hell? The returns is all that matters. The returns is going to tell you, because the price action always follows the returns. Like you'll usually see that our returns oscillator will turn down or turn up while price action is going the other way. But sooner or later, that price action will go in that direction, right? That's how the returns always make the move first. And the divergence between the returns and price action are literally giving you that warning. Take your profit, man. Take your profit. Look at this div that's building. And that's all the way down even onto a 1 minute or a 5-minute chart. Yeah. It's a lot of the times how I find my entries on a 5-minute. Right? The 15-minute will be screaming, oh, get an entry here, get an entry. Then I'll drop to, say I'm trying to get along and I'm on the 15-minute and everything's like green, go, let's do this. But I want to put a post-only limit order in, right? So, if I were to be trading on FTX and I had 0 fees, it's not going to cost me anything. So then I drop down to the 5-minute and I see hidden bear. Or bear divergence building on the 5-minute chart. And I was like, oh, this shit's going to pull back a little bit first. And so then I wait until that 5-minute divergence plays out. And then I'll go over when that 5-minute divergence playing out. And I'm like, okay, where's price action? Where's price action at like right now? Like say on this 15-minute chart right here, and I drop onto a 5, and this is the 5-minute div that played out or something. You know, maybe I can try to get an entry down here to 68.3 on the 4-hour of Laplace distribution. Right? Front run it a little bit. And look what happened. Look at this 15-minute candle. I mean, that's just, I don't know if that's what happened, but I mean, I'm usually pretty good at reading the candles. That's probably exactly what you were seeing, right? And to be honest, it was probably a hidden bull divergence because the trend was up. We had a pull back. It created hidden bull, higher low on price action. So, and then boom, look at that 15-minute candle continuation right up to where you would be taking profit at the 2SD on the daily, bottom of the monthly range, up above the 95.4% Laplace distribution level. Bing, dong, ding. Or you could just hang out in the incubator and bounce off the walls and listen to a bunch of goofies. Had to throw that in. Let's see here. What's the incubator? I don't know. It's where you hatch little baby chicken. Let's see here. All right.
Where you hatch baby chicken.
Hey, baby. It's where you hatch the baby chickens. Let's see. Let's go up to 4-hour here. I know what I want to look at. To actually see if there's some hidden bear building. Is there hidden bear building? No, bear building. No. Boy, they're trying to keep it. Right now, you can see, so this high on the returns oscillator right here, that's this blue candle right here. Price action's dead on it. So there's weak bear div building. That's why I'm telling you right now, to be safe, these bulls, they want to close this price action up here somewhere. Right? Into the monthly range. Look for them. If they can get up here and close the daily above 44, this thing could, at the beginning of the day, price action can come down, maybe test the new 68.3 on the daily or on that 4-hour and rip just like it did here on today, right? So let's see here. But that's what they're going to want to do because that is building right now. Let's see. But that's the thing. You're going to want the returns oscillator. This is a 4-hour. You'll want this returns oscillator to turn up, though, with the price action move. We got to get up above this area. But the good thing is that the last top of the returns oscillator, there is no div. So we'll be building from back here. Well, if you do go to the top here, way back here, up in this area, there is some hidden bear building. Let's see what happens. What's this look like on the daily? That's the thing. There's bull div on the daily. Bull div. And I was talking about this the other day. Remember yesterday I was like, you know, if we get price movement to the upside, you're going to see this returns oscillator. Because remember, this is what it looked like at the end of the day. It was actually heading down a little bit. Now, boom, it's coming up. Let's see what happens here when it gets up to the zero mean, which is the dotted line right here. All right. You see the returns get up above the zero mean. Sometimes this is what it likes to do. It'll climb up above there, then come back. The returns will come back down to bounce off of it to rip to the upside. Let's see here. Chad, you can see, especially I have got, let me show you in the indicator, well, what we have here in the inputs now. Right here, alpha 2 is the z-score. Use mean of log returns as source. Right? And thank one of our coder wolves for doing that. Wonderful. What a beautiful man. Yeah, I was begging for it. He did a great job. So now we've got the z-score on log returns, which is if you're using it for divergence, now you can see, I mean, both the returns oscillator and the z-score are both showing bull div, right? From right here over to this down candle. And that's pretty much why we've had this up move. But look, right now, that's another place, right, where I showed you where that wick went to. It also went right to the Gaussian mean, 44,494. I guess it was about $400 shy. $400 shy, but it did on the daily make a run to this Gaussian mean. You want to see some daily candles close up above this white line. That is the Gaussian mean of these deviation bands, which I bet, let's see where the power means are at up here, right around 46.5. Yeah, it's 3K above. Yeah, and if you look here, this is what's great about having these three ABRs. Look at the low length, flat volatility, negatively correlated. That's telling you price action was going to walk up. Then on the mid length, you've got a little bit of expansion, positively correlated. Price is going to move up. On the high length, flat volatility, negatively correlated. Price is going to walk up. Powerful. And that's exactly what we did today, right? Nice candle. 4K, almost 4K at one time. Yeah, about $3,400 or $3,600 in price action. Beautiful, 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 beautiful. And right now, the correlation for the variance is breaking to the top side as variance is turning down. This is going to be interesting. I mean, what's that telling me? We could get a rejection off this zero mean. We could still be in the chop, and you could see this thing back down to 41 again, right? I mean, there is a lower number I was looking for, right, to get a nice little position, but yeah, that didn't get hit. It's not out of the question though. But if we go to, let me put this on index so we can get up onto these higher time frames. Where are we? 3-day. And when does this 3-day candle end? Whoa. Yeah, I got to turn off the dead man. So we got to get, and I believe you're listening right now. There, we need to fix the log function in the deviation bands. Actually, let me see something real quick. I'm back on. Let's see. Ooh. That's why, never mind. Yeah, you see, if you put it on log, we will fix that so you can have them on log. But right now, actually, let's put that price on regular so I can get a good look here on the deviation bands. Yeah, we're getting back up above the power means on the 3-day. That gets you a little, you're like, oh, really, Bitcoin? We're going to close some 3-day candles below the power means? You don't want that. You don't want that at all. It's always ugly. So it is looking like we are gonna, I mean, the top power mean 42.823. Definitely don't want to close this 3-day candle below there. And let's see, 2, 4. What's the date today? We get, oh yeah, this was the new 3-day candle. So this thing closes in a couple more days. Let's see if we can get this 3-day back up above like 46. Up above these log MAs, that would be wonderful. What is this first, or what's this mean at 45.761? It's a little bit below those log MAs. What's this first deviation band at 53.881? What's the 2-day look like? 45.213. What's that first? Almost 50K on the 2-day. And what are we doing here? We're literally still having an outlier on the variance. Yes, we are. Yes, we are. And you can see on that 2-day candle how it was positively correlated for that day right there. When we started having the outlier, look, it left a big bear wick behind. That was a nice blue 2-day candle. But then right there, bam, it goes negatively correlated where you're still having an outlier. And so whoop, down. We'll see that change. When do we get the new 2-day candle? Tomorrow. But yeah, and you can see the Z-score, right? You can see the Z-score on log returns. Powerful, powerful, powerful. Look, right when we had this 2-day boom, 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 tumble from way back here, right? From this high way back here. Look at all the lower highs on the Z-score. And every little one, boom, boom, right there. Had a little pullback, 6 days. Then another lower high right here. Had another pullback for about 8 days. So what is the returns oscillator? No divergence. No divergence. What about the 3-day? Yeah, you can see we got this little 6-day run up right here because of this bull div. Yeah, no div on the 3-day either. That's what's kind of telling me we could be possibly still be getting into some choppity chop. Nothing. About a weekly. Time is it? 2:43. Yak, yak, yak. And here on the weekly, you can see how this bear div printed. And right when it did, I mean, boom, 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 boom. The variance had just started heading up too, heading into negative correlation. I want to see what this looks like at the end of this week. Let's see, yeah, these DLP candles are pretty flat. And the one good thing is, right, I mean, we're still, the returns are still above the mean with the EPP, with the entropy. And we're actually, baby is low too. Okay, something's about ready to happen on this weekly. We're going to get a move. Something's going to happen here. We're either going to be back down. I mean, God, could we go back down to 30 again? Hey, Bitcoin can do anything it wants, but really don't see it going that low again. It could, though. There's a lot of longs right now, at least on Bitfinex, and they are piling up. Piling up. Wow. Is that just today? Holy crap. Wait a minute. There they are down there. No, that's what I thought earlier. Yeah, about 300 Bitcoins dropped off. But of course, like right now up here, and you know, you got a few shorts piling on now after the ones. I mean, it was up almost at about 2,000, and they were literally putting shorts in at the bottom. They all got wrecked. Now that the price is back up here, the bottom of the monthly range, now they loaded back up about 160 Bitcoins a day. People are so nuts. I mean, it's almost like they're just monkeys throwing darts at a board, which most of them probably are. But you can see this low-length AVR, right, on the weekly, contracting, negatively correlated. So we got this nice, we got this bullwhick here pulling back up. But on the mid-length, it's contracting positively correlated. And on the high length, contracting positively correlated. Same price is going to walk down. That's why we're getting kind of a nice little bullwhick. But which is telling me, I mean, hell, this thing could be back down right here and test this bottom power mean again. Because these two are going to overpower that low length one for sure. And considering the variance is heading up, negatively correlated, there's still this bear div. Yeah. There's no bull div at all anywhere on these high time frames. Look where the monthly candle is right now. It came down and tested this Gaussian mean. We are above it. We are above the Gaussian mean by about $500, right? And like I was pointing out before, right? We got there is some hidden bear on the Z-score, but there's hold on here. Hidden bull on the returns oscillator. Actually, let me see something. Yeah, that's a battle of the oscillators right there. It is hanging on to this monthly Gaussian mean. And there's no bear div on the DLP, which that's always good. It's always good. And obviously, this is a monthly chart going back to freaking, what am I on? Index. Yeah, that price goes all the way back to literally, I think on this index chart to like 2010 or something. I mean, look at the EPP. It's never even been in the red. It's crazy. Crazy, crazy, crazy. But there's not enough history to really populate it all. But from about the start of the bull run, literally June 2015, September 2015 right here, Bitcoin was at $230, $230. And then whoop, right there, that's the high. That's a 20K high right in this range. It's just like a wave of green. That's always good to see. Yeah, you can see, yes. I mean, on the monthly, on these two lower length AVRs, it's contracting, negatively correlated. That's why, I mean, look at all these bull wicks on the bottom. I mean, now these last 2 months are pretty much big fat ass dojis. There's just indecision going on. Who will win? We'll find out. Let's look on the 7-day. It's always different. Let's check out some div on the 7-day. Now see, this is different on the 7-day. This is why if you don't know about 7-day, it's different than the weekly, right? Different than the week. Like we get a new 7-day candle 25th. On the 25th is when we get a new 7-day. It's never going to be like on Sunday. The weekly is different than 7-day. And look, the variance on the 7-day is heading up, positively correlated. Where on a weekly, it's heading up, negatively correlated. But at the same time, you've got this bear div that printed, right? The Z-score. No. Yeah, so we did just have this bear div. But that could be, 7-day candle down. Who knows? And look how perfect a test that is to the first standard deviation band right there. Boop! Bounced right from it. What's that at, 39? MJ, how the hell did I never see that? There's that confluence right in that area, 39.1. Funny. Hey, Bitcoin, how about a big wick? Right down there. Where's that baby at? Yeah, right now. Boom, because we got that little pressure. It's at 40,000. Where's that 39.1? Damn it. There it is. Yep, the 2SD on the daily. Or no, hell, that's a 1SD on the daily, isn't it? Yeah, boom, there's a reopen. So the 1SD at the daily was right around 39. There's a lot of confluence there. That's interesting. I didn't see that on the 7-day chart. Perfect test. Almost. It's at 38.772. Good times. Yeah, look at the 7-day too. Looks like pretty much down. That looks like. And they're all contracting, negatively correlated. Whew. Yeah, this is just telling me there's a ton of indecision right here. Or it should be plainly walking up. That's why this is a big shakeout. That's what all this is telling me. It's just a big shakeout. Like I've been talking about for weeks. Bitcoin's going to shake people out of these positions. There's no doubt about it. They're not going to let this thing rip to 100K with 43,000 Bitcoins long on Bitfinex. My opinion, you got to knock some of those off. And it did. It got down to about 38,000. Well, that just tells me there's a lot of people that are just spot long. Okay, they're just spot long on there. Or no leverage. Let me rephrase that. They're long these Bitcoins. There's no leverage. They're not going to be liquidated. They're just like, okay, I know Bitcoin's going to fly at some point. I'm just going to get in a song. I don't care how much I get underwater, blah, 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 which makes 0 sense. 0 sense. Because when we were at the high at 65, God, there was like 54,000 or something. 55, something like that. 1,000 Bitcoins longed on Bitfinex. Jesus. It's a lot of money. But yeah, it got down to 38. Trippy. Check something. I'm in the stream chat since we got about 10 minutes left. That shit. Yes, you are. Beautiful. Yep, cool. Yeah, anybody that's here, you're in the right place. We are here to help. 100%. Okay, cool. Now let's go to some low time frames. Get back on my favorite. It's this 90-minute chart telling everybody. Yeah. See, the 90-minute, boy, it's getting stifled by this power mean on the 90. If you don't use a 90-minute chart, you should get well acquainted with it. Really should. It's a powerful time frame. Not too many people use. Yeah. So this is going to be interesting at close. Hell, I mean, on the high length AVR, it's pretty much been expanded since the beginning of the dump, right? But we are starting to build the log returns are above the mean again. So we'll see. We get a big entropy. We get a lot of, if you see the entropy start to build, and we're coming out of randomness where it is right now and starts going into trend, that trend's likely to be to the upside. But it did. It got stifled. 3 90-minute candles. Oh, attempt. Got stifled by that 90-minute power mean. And there's actually some bear div building on the DLP. There's bear div on every damn thing. 90 minute. Yes, there is. Good. Maybe I'll get my lower number. Wonderful times. But there actually will be, you get this oscillator lower here. They'll start building some hidden bear or hidden bull. Yeah, just on that. And you've got variance coming down, right? Negatively correlated. So boom, we did get these pushes to the upside. Just having trouble getting by this first deviation maybe too. And yeah, break that 90 in half, right? Get a 45 minute. Which is above the power means. I mean, I kind of like the way the 45. I mean, you can see what happened when we were dumping, man. You get underneath those power mean and these log MAs, rejection. Got a rejection right there at the first tap up here to the top power mean, came back down. Now everything's flipping. The log MAs are above the power means. The power means are crossing each other back up. So it would make sense for this to come back down and test this power mean. 42.5, huh? Which isn't too far down. That would be a good place if they want to push it down to test to see if the bulls mean business. So considering we're working up to the end of the day, it will be interesting to see where the 68.3% daily to the downside Laplace distribution is at. If it lines up with these power means down here, that could be a nice little bounce. But let's see here. Yeah, 45 minute up here played out. Did build. No, it didn't build any, which is good. Variance is starting to head back up, but that doesn't look strong. And this is what you look for on this indicator. You're waiting for that variance, the outlier. That's what you want to see. You want to see the outlier. Then boom, goes all the way through that candle. Then it breaks negatively correlated while it's still having an outlier, which the price didn't really dump, but it was up here getting supported by that Gauzy. That's what it looks like. Then this is where you had some bear div print, right, on both C-score and the returns oscillator. And then we got a decent 45-minute pullback, like that 6. Nice bounce off the first standard deviation, about $1,000 down. Beautiful. Beautiful, beautiful, beautiful. It's like this last 4-hour candle right now is doing 68.3% Laplace distribution. See, it went up. Boom. It did. It went up and tested the 95.4 again. That wick went right to it. Rejection. Now it's bouncing off of the 4-hour 68.3% range to the downside, which is got a little confluence with that daily volatility range level. I mean, the Bears want to push this down. What do we got? A couple hours left in the day. The Bears want to get this baby back down here in the 68.3 range for sure, or below this daily range, 100%. And like I said before, when it gets up to the end of the day, they know where this new daily volatility range is going to be. All right, it's not like this is a secret. So they're going to want to push price action down below that area I was talking about, like 42.6-ish, something like that. Yeah, and you can always look. You know, you look at the wicks. Usually, when you see wicks, especially to both sides, it's like it's telling you where there's a lot of volatility, right? Where they've drawn like a line in the sand. And it's usually where you're going to find those new ranges. I mean, it could be as high as 42.8, but they're going to want to push the price action down below that area for sure. And the bulls are going to want to close up here inside the monthly range. Who will win? Stay tuned to find out here in the next 2 hours. We are almost done. It's a low time frame. What are you doing here, Mr. 15-minute? Coming off some div? Nope. Nope, no divs anywhere. But we are, we're having an outlier on the 15-minute CV, and it's negatively correlated. But we did just test that 15-minute deviation band at 43.3. Suck back up. That's a wick right there, you see. Where did that go down to? Yep, 43, about 43.20, 43.11. And the deviation band was at 43.007 on the 15-minute. And flat volatility, positively correlated. Expanding, positively correlated. Contracting, positively correlated. So you got two saying down, one saying up. So you're going to see this bull wick, but this 15-minute will probably come down to test here at least 42.85, which is probably this one SD. No, it's a little lower. It's in no. Oh well. So if you're watching this on YouTube for the first time, we are Alpha Trading. We trade volatility, probability, and statistics. You will want to subscribe to our channel, right? You can see we're new, we're growing, right? If you're a smart trader, come trade with the smart money, right? The high frequency trading firms are using volatility, probability, and statistics to program their algorithms to trade for them. This is what we like to show people. In this random market, right? 80 to 90% of the trading going on is being done by these algorithms. Why not trade with them? Don't try to trade against them. You're going to fail miserably. If you see something in the video you like, give us a thumbs up. The link to the Discord will be in the description of our videos. You can come in, hang out in the waiting room while we restructuring and getting our indicators ready. You can just hang out there. We'll let you know when we open back up. Like I said at the beginning of the stream, it is an exclusive Discord. It will cost you $10 a month to join our Discord to get the opportunity to view all the educational material we put together. And it's a lot, and we put a lot of hard work into it. And the opportunity to get involved using our indicators to trade with. Okay? And that is not asking a lot. We have a great community. We're very helpful. And you will enjoy yourself. It is a no-brainer to come check us out. If not, just come in the waiting room. You can ask some questions in there. We're not afraid to help people that just want some questions asked, but you're going to want to join the Discord. There's no doubt about it. And then, as usual, I want to thank everybody for watching live. It's another thing you get when you join this exclusive community. You will get these live streams. You don't have to wait till they come out to YouTube. You can watch them live in the Discord. Sometimes we do some on the weekends. Anybody can stream anytime they want. There's 2 voice channels. One's the alpha, one's the general. Anybody ever wants to stream, show what they're up to, knock yourself out. Go on in, have a stream. See who will join you. That's what we're looking for, participation. And like I said before, when you come in, if you buy our new indicator package, it's going to be packed full of goodness, all kinds of beautiful combination indicators, and some really great standalone indicators. But you will like what you see. It is a no-brainer, 100%. So come check us out. And that being said, wherever you live at on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. I'll see you tomorrow, 2 p.m. Pacific time. See you guys.